Hello, guys, and welcome to the 143rd edition of the Trading Opportunities webinar. This is Nirav, and before we begin with the actual discussions, let me quickly run down a very quick introduction for those of you joining in for the first time. This is the weekly market analysis series called Trading Opportunities, and we analyze markets for, as the name suggests, trading opportunities. For those of you very new here who haven't heard of me, my name is Nirav. I'm also the author of the book Think with the Markets, which is available on Amazon's Kindle edition. Apart from these webinars, I also have a video course on the subject matter, and you can check the other resources and links by visiting my website 50is.com. In the last 141 webinars, we have captured a total of 360 trades. All of them were, of course, discussed live in front of you guys. And actually, I never checked the audio myself, so it's working. Okay. So, and as I was saying, 360 trades we have captured so far in the last webinars, and we will discuss what happened with the discussions from the 142nd webinar today. The 142nd webinar was conducted on 22nd of this month. And give me a moment here. So I was saying the 122nd webinar was conducted on 22nd of this month, obviously on Friday. Those of you who are not regular with these webinars, we generally conduct them every Friday at 4:30 p.m. GMT or 10 p.m. IST. If the time is too vary, I will update it, of course, on my Twitter and Facebook profiles, and also we go live on LinkedIn. Right, that's about it for the quick introduction. Let me know, guys, if you are able to hear my audio. While I quickly check, I have a running position on S&P, and it has become quite profitable, and it is quite a big position. So I'll just monitor it. Give me a few seconds, moments before we start with today's discussion. All right, I don't see anything here as for confirmation, so I'll just check at my end. Well, Luis, you are there. Let me know if the audio is working fine at your end. While at my end, I have tested it. Seems all right, and we are almost about to hit our target minimum, which is at what is this 6041. So I look to book partial profits on my scalp longs, and after that we will what do you call move forward with the or leave the remaining swing positions on. So I have the position being monitored on another screen. Once we see that alert fire off, we want to book some profits or take the whole of the scalp profits. Okay, thank you, Luis, for the confirmation. With that, let's now head to the actual webinar. And let's just begin with first going over the discussions from our last webinar. So here is the recording from our last webinar connected on 22nd. So we do have the alert firing off. So let me just, so that I'll just take some profits here. And so I've taken majority of the profits off of the SPX trade. And give me a moment while I update Slack. Yes, as I was saying, we are first to discuss the second target. By the way, we are looking for 6049, and then possibly something higher. These are minor targets. I'm using lower time frame analysis for that because one second. Because it was a scalp trade. Yes. So as I was saying, we have to first check out the chart of Euro USD. After that, we'll go over the actual chart, the recording of the Euro USD discussion, and then we'll go over the actual chart. So here is the Euro USD discussion as done in the last webinar, somewhere over here, I would say. It's a trade setup or actual trade I've played. Okay, so here's the discussion from last webinar. I'll just zoom in, and the market was trading around 1.04031. We were expecting a corrective pullback to the upside, perhaps till 1.056 as it was our secondary resistance level, and the first resistance was at 1.04745, and after that we were expecting a move to the downside. That was the count analysis, and by the way, we were holding shorts. We had booked profits on shorts, and this was the target level, so everything had worked out in the last 2 weeks webinars. We have been tracking this fall for quite some time. I think you can check the last webinars, but let's now proceed with the actual chart. So here's the actual chart, and the market has already touched the resistance level at 1.05627, which was the second resistance level. The idea was that if the market shows signs of reversal here, then we will consider a sell opportunity here and look for shorts. So far, the market has not done that, which definitely means we need to check what's happening and possibly look for some other alternate views. So first view is we are assuming that from this point of reference, the wave 3, we have what you call A wave up here, B wave up here, and possibly a C wave up here, which is supposedly complete. Now, that is the what you call the count according to what we'll say the bearish perspective, because we are at a resistance. We have taken some movement above it, and then we expect that to be a false break. That is, people who were expecting that if this level fails, they will go long. They would have gone long here. If not here, then here. And once they are trapped, the market will go down. That's just a general operator theory. And accordingly, if that is the correct count, then we will look to add shorts maybe around 1.05143. That's my first alert here. So that means I will consider analyzing this market again here and then look to short. If not, then perhaps this market is doing something else. Perhaps this is just a WXY correction. This is just the W, this is the X, and it will head up for a Y. So I'm less inclined towards this corrective continuation because we are already at the resistance, but that's not a very what do you call strong point. The counts can change, and resistance levels will need to be updated because everything is dynamic. So we need to be mindful of that, and shorts only, look for shorts only below 1.05118. Count remains the same. We are looking for a wave for completion. If it completes here, that is goes a little bit higher. It should not go that much higher. I mean, it's a wave 4. It's already at the distance, so maybe a little bit more higher. And after that, we'll look for the leg down. And the other view or alternate view is the market will head down right up from here. So let's call the straight down from here as our H1, and H2 is, one second, H2 will be the idea that this market will first give one leg up before giving the major leg down. So these are the two scenarios. The entries or the consideration for the H1 is below this level, and the consideration for H2, we don't really have to care too much about it. First, the market should take out the last high, which is around 1.05968. It will give us a quick scalp opportunity there. Quick longs we can enter if you are fast enough, obviously, because these are counter trend trends as per our current understanding, and so on and so forth. We can build some minor positions here, quickly get out, and then look for reversing. Again, that will require more expertise and understanding than what I'm discussing here. But that's a quick idea. If you guys understood it, and that's fine, that's good. Maybe let me know in the comment section by typing in confirm understood or something. Otherwise, we'll just move over to our next chart of crude oil. So again, we are at the recording of the last webinar, and let's see what was being discussed on the chart of crude oil in our last webinar conducted on 22nd of this month. So yes, I recall there was not much of a discussion. The idea was still the same. The market's going down, correction, and then another leg down was expected. And yes, I forgot to check the comments. Let me get back to that. For that, there are too many today. So I won't get too much into the complexities. You can just check the last two webinars. I'm just covering it for a quick sort of formality, because we generally consider this market in our every webinar. So we are expecting a zigzag kind of move from here. This is the point of reference, starting point of the analysis. And the price level starts from 95.209, and from 95.209 we are expecting a correction down. You can call this as an A or something else, perhaps. Doesn't really matter, because the idea remains the same, that the market from here can continue within the sideways range. And I have taken some swing shorts, but those are very small positions because it's swing and I have to hold it for a very long period of time. Thus, main idea which will be in my favor will be something like this: A down, B up, C down. The ideas which will not be so much in my favor will be like this, that the market continues, drags on more time, and be somewhere here or whatever, and then it goes down. So not a very what do you call trending market as of now. So wait and watch on it, and I would say just wait and watch on it unless you are very good at intraday analysis. I'm not going to discuss too much in the details of it because we have better opportunities elsewhere. So better, clearer market. So that's about it for CL. Without putting in any more time on this, let's head over to gold. Here's the chart of gold. Let's see what was being discussed in the last webinar on gold. And then we will see the actual live chart. So we were taking this point of reference. Let's see forward. Yeah, I discussed a longer time frame analysis. I recall that much. Yes, I guess that was the STF. There was some trade. Just give me a few moments. I'll just check for the sake of record keeping what we were saying in the last webinar before we proceed with our current analysis. Got it. 5, and then there's a correction there. Yeah, so the main idea was, I think, that the 4 might be continuing. Possibly that was the idea, but that's a 15-minute chart. I'm more interested in STF. Yes, I'll just stop it here instead of wasting more time. So the main ideas, as you can see on the shorter time frame, was that the wave 4 is either complete or continuing, and then we can see a small leg up. 2705 was the price, and we'll discuss the STF now on live chart instead of wasting more of the chart searching through recordings. So 22nd was here somewhere. Where is it? Second. Okay, so our discussion was possibly somewhere here. I think, yeah, here. Exactly here. Exactly here we were discussing the markets. And the idea was that one minor leg up is remaining because this was a 4 and the market was at the 3 was here. And then if this level is taken out this high, I mean, then we get a short term long opportunity. So we had a resistance marked there. I don't know if this was marked in the live webinar as well or not. But then again, it all worked out. The market did give us a small leg up, which is all we were expecting for a fifth leg in this impulsive formation. And then it reversed from here. So I would say gold we had a +1. That is, we had a trade that has worked out. And now let's discuss the actual current market. 1 second. Yes. So here's the current market chart on gold. Some little bit of complex analysis. I'll just cut to the chase and show you what I have in mind here. So this was the high time frame idea, which I was suggesting that if the correction is complete here, then the market can just fly high from here. But that was not the most clearer count on a high time frame. We had the idea that this is just the first leg of a bigger correction, which suggested that this could be just a sideways movement, and then we followed by another leg lower. So that was the high time frame analysis, and I am currently in assuming that as the main theme, and we will consider the bearish scenario as our main hypothesis for now. Again, if you want to know more on why I'm considering this and all that, just watch the last webinar's gold analysis. I have discussed this whole thing in quite some detail. Good morning to you, Luis. I'm attending the what do you call live chat a little bit late today. Thank you for confirmation and good evening to you, Ativat. Hello, Mohammed. And now let's go with the shorter time frame counts which we have on screen right now. I am assuming that this whole leg from this point of reference price level of what is this 2789 is a W. Again, we had alternate views. We have discussed that in the last webinar, and if you want to, you can just go ahead and check it by yourselves, right? So I'm not gonna go ahead and do the same thing over and over again. The idea is that if the X is complete here, then we get a down move straight from here. Or if this is what do you call itself continuing or propagating sideways, then we can expect something like this going sideways within this range. Right. So these were the two main ideas we had on this chart. And namaste to you, Singali, R Singali. Hopefully that's the correct pronunciation. So, anyways, what we were saying is that W down, X sideways, or Y down, but that's not the whole of the thing here. There is another possibility which is not very pleasing, but of course that's there, so we'll have to discuss it. And then that is that this market does not even propagate within this range, but moves higher near the highs, which we will call that's last highs, let's say. And then after that, it will give a correction and then take off. So basically, at this point, the long story short is like we have a lot of possibilities here. The market can just propagate sideways, then down, or propagate sideways, then go up, minor leg, and then go up. So you get the idea. That's why I have not taken a trade on gold in this week, I believe. Right, at least nothing major. Now coming back to a shorter time frame and trying to find some edge here. Let's see what's going on here. We had some clarity here. So if we move the point of reference to 2720 roughly, keep in mind every data feed will have a different little bit of difference in price. I'm using this data feed just for reference. So anyways, from this point of reference, I'm assuming we have an impulse here. And then I'm assuming that we have a correction. When this correction is complete, we will possibly see something like this. A zigzag kind of pattern is the assumption right now. So in this zigzag, we have completed the A wave and we are currently propagating for the B. As soon as this B is complete, we will look for a leg down for the C, which should take out the last low of 2604, sorry, 2605. So if this count is correct, we don't have to do much. Generally, I will like to add some minor positions, maybe around 2637. I'm just saying maybe because this pattern has not fully evolved right yet. And actually, the more conservative setup will be to look for shorts below only 2626. So with that in mind, I will say 2626 is our main level to watch out for. And below that, we'll consider shorts. A scalp long possibility exists in this market. Going above 2664, we can have a minor scalp position for the 4 or 5 points, but that's not much. And for gold and the contract size and everything, I wouldn't say that's a very good trade unless you really know what you're doing and have a good broker, etc., etc. But anyways, that's about it for gold. I don't want to go into much discussion. I have posted detailed analysis on Slack, but going into that much discussion here would be a little bit out of the scope of these public free webinars. But here's one point: we are assuming that this B is still continuing, so that's why shorter time frame I can draw very quickly, roughly here. We are assuming that the C is still remaining, and within the C, because we know ABC up again has a 535 kind of pattern. The confirmation is not there yet, but from the looks of it, we can say that we have a dot one here, a dot two here, and a dot three here. So I'm just giving you a rough idea. That's just one of the multiple scenarios that's possible. If that plays out, that is the basis of taking scalp longs for wave C. Right. That's a very quick take. Again, as I said, it's not a confirmed count. There are, I think, at least two more scenarios, but that's the gist of it. Long setup. If we look to take, we'll take it basis on this count. And short setup, we already know we are looking for the count on the right. So wait and watch kind of market with the real trading opportunity, which I believe the more clearer trading opportunity coming in below 2626. So let's call this, and let's not call it anything. Below 2626, we will have the zigzag setup and shorting opportunity and minor scalp longs I've already discussed above B. And the counter scenario, the extreme scenario, where we are assuming that this market is completely bullish. We don't have any confirmation for it, but we will know soon enough. The market will take out 2688 and then 2710, so on and so forth. And at that point, we will have a confirmation. So I'm not very keen on finding any long setup here, other than the scalp which we just discussed. That being said, I think we are done with the discussion on gold. If you guys have any doubts or questions, you can just type them in the live chat. I'll just take a few moments here before we proceed with our next chart of S&P's 500. And yes, of course, guys, if you have liked the content so far, make sure you hit the like button and do not forget to share the content with your friends and colleagues once we have completed this whole webinar, right? We'll shortly join back for S&P, Nifty, and then BTC. So I don't see any questions here. Other than that, there are some comments. Hello, Dawood. Evening, Raghu. And thank you, Arsingali. Looks like you are watching a delayed stream here. So yes, with that being said, let's now head over to our next chart. The next chart is of S&P's 500. I am currently holding a long position on S&P. And we just closed some scalp trades. So we'll discuss all that. So here is the recording from our last webinar on S&P's 500. Let me move a little bit further and see the whole thing. Yes, so here it is. So let's see what was being said in this last discussion before we move forward with our current one. Looks like we were discussing the possibility of corrective continuation to the downside as a complex WXYXZ triple zigzag. And let me just play it and see if there was something else. Below 5881, we were looking for selling opportunities, and the price was 59.70. Yes. And of course, longs above the break of the last high. So now let's go to the actual chart and see what 59.70. We are almost near our target too. So first, let's see what was discussed in the last webinar and then proceed from there. 22nd November, 58, 22nd, 22nd, 22nd is here. So this is where we did our last discussion, somewhere over here. 58.81 was never touched, so the short setup never got triggered, and it has taken out the high. And I don't know what was a clear long setup. I think there may not have been one. I couldn't find in our very quick look at the last recording, but if there was, you can check it. But the swing setup was that we look for longs above the last high, which is triggered. We are already long. So I would say it's a plus one from a swing perspective. Short term wise, as I said, I'm not very sure what the setup was. So now let's see what the current count is instead of getting too much into last this and that. So I am assuming this market continuing as a nested impulse, very aggressive way I have taken of counting this. I think we need to have a counter view. We'll check that once. Let me check what's this, that. So I'm assuming that from this point of reference, which is the price level around 58.40, let's say, roughly speaking, we have a wave one, we have a wave two, and then another one lower degree and another two lower degree. So that makes us in a wave dot three of three. So we are in wave dot three of wave three. That means we have one and then another one, two legs in the other direction remaining currently on this counter. Right. So with that in mind, that becomes a super bullish view. So why am I taking very small targets here? Those small targets are for our scalp long trades, not the swing longs. I have positions, multiple long positions on S&P. So some are taken from a scalp perspective, some were taken from a scalp perspective, and some from a swing perspective. So for the scalp, the position size is generally bigger, and we look to exit out faster, right? So we'll look at it on the charts. In a while, I'll just show you the actual live Slack posts, but we just want to analyze the actual price action and see the counts for ourselves right now. So here is the long trade. We exited the first longs here, 6041 on scalps. So let's remove it. Second one we'll exit around 6050 perhaps, or I'll just trail it. The remaining scalps I'll trail it. Right. And the count wise, the perspective is that this market can just, because this is a wave one and this is assuming we are assuming it as a wave two. So count wise, we want to see the market take off from here. Perhaps some small pullback is possible, but it should no way go below this level of 5990. Going below 5990 is a red flag that this count is not the one or the main count, right? And because that's the red flag, it becomes our invalidation level and stop loss for swing trades as well, right? So that's our take on S&P for now. On the shorter time frame, as far as the higher time frame counts, if this is a three, then wave three of three are the supposed to be the strongest movements in any trend, and not in any, mostly in indexes. Commodities can have a little bit of a variation. But as I'm just saying, we would like to trail our swing positions as the market continues going up. Because if we are correct, if this really is a three of a three, then the possibility of it smashing our upside targets is very high, and it exceeding our expectations is again very high. And not to mention, let me just go to daily chart quickly. Not to mention that we are already on lifetime highs or above recent lifetime highs. So in these situations, you can see the rallies can be very strong like this. Whatever this one was. So anyways, you get the point. We want to stay in the trade as long as possible. So we'll consider trailing rather than taking targets. As for the targets, I'll just take a quick look. If I have considered the upside targets, yes, there are upside considerations here. Let's see. So the first upside target is 6160, which is then followed by 6400. So these are high time frame targets. I'm using channels as our resistance levels or targets levels. And the next one is 6400. So these are the this is the outlook from a shorter time frame as well as longer time frame I've discussed, and we wanted to have a quick look at a counter view. So the counter view will be still activities. Actually, we still have not got any invalidation for the counter view. The counter view is basically that this lag is just the A of a correction. This is the B and this is the C. But then again, as I said, I do not think that that is the main count which is playing here. And even if it is, then I think the market will remain or keep its correction within this range between 5834 to 6040. That's just a higher time frame outlook, right? We want to focus more on shorter time frame currently because the trend is currently in our favor and we have a position which is already in plus. So we just want to trail it and not bother ourselves with too much if else scenarios. Hopefully I was clear enough. If there is any doubt, just let me know very quickly in the comment section. I think this was a complex count. While I tried to cover multiple aspects, it will probably not be clear to the beginner or intermediate audience as well. So you will have to probably watch it multiple times by going back in time. Anyways, I'll just wait a few moments before we proceed. And yes, obviously, we'll check out Nifty. And as Mohammed is asking, will you discuss BTC? We will discuss BTC today, Mohammed. And of course, those of you who are watching it live now or later on as a recording, if you are enjoying the content, do not forget to hit the like button and share the content. We need more and more views, obviously. Who doesn't? So, anyways, so that's it for the analysis. I'm not seeing any questions here. So we'll just proceed with our next chart of Nifty, which will be followed by last chart of BTC, Bitcoin. Where is so we'll just head over and check what was being said in the last webinar on Nifty first. Here we have the recording from our last webinar discussing the chart of Nifty. And let's see what was the exact analysis at that point in time. We were assuming that this is a correction A down, B up, C down. If it's complete, we wanted to see a retest of this trend line, the 0 to B trend line. And once we see a retest, we can look for longs. And the second idea would be that we see just a correction, not a retest of the trend line, and then we look for longs. This was all discussed in very quick 1 or 2 minutes, I believe. And the setup was very clear, so not much discussion was required. So that's our take. Let's now head over to the live chart or the actual chart, not live chart, because this market does not trade at this hour. So here is the whole theme or the chart. And let's draw the trend line, low and behold for it. Wait for it, and there it is. Marvelous. As if the market knew about it. Of course, the market knew about it. This is not just an Elliott Wave trend line, it's also a regular trend line. So the market did not give any opportunity for late participants to buy. It gapped up above the trend line. So people looking for a break and then buying were left out. And pullback is there, but it did not go as deep as to test the trend line, which can and does happen a lot, right? Anyways, so look at the simplicity of this analysis and how well it has performed so far. And that was the A, B, and C, as you already know. So with that, we have another trade discussed from our last webinar, or setup, I should say, which has worked out. Obviously, I was not trading any long here. I had some positions but those were hedged option positions. Another segment which were influenced by this trade and ended in positive. But then again, I did not take this particular swing. Those were different matter, right? So, with that being said, the setup is literally performing as it is. If we build up on our last discussion, we can say that swing down testing this is possible, but I personally do not think that's a very what do you call comfortable situation because this market has already given a corrective structure. We can count this as an A down, B up, and C down. So basically, a flat kind of correction. This is the A, this is the B, and this is the C. The C leg is a little bit too expanded. Can and does happen a lot, not a lot, but can and does happen. It's not very infrequent, I would say. Right. So here is some idea I have is first of all, if we want to go long, the conservative setup is very simple: 24350. Above that, we consider long setups only above that. And as far as shorts are considered, the idea of this analysis failing will become clear if the market goes below. Actually, I personally do not think it will test it, but let's say if it does test it, it will be almost near our last support. So we will consider this as our short trigger 23350. Of course, it's very deep, and the reason is that we do not really want to consider it as our main analysis or main theme, right? So remains very simple. The idea remains very simple. Long above 24 350. Shorts, you already know, it's already written on screen. It's the recent low, so everybody knows it. Shorts, keep in mind, will not give a direct return. They will be more of a swing kind of trade. We probably will have to build up because if it really does go lower and break this level, then it will probably either be very sharp sell or extremely time consuming sideways movement. So considering both possibilities, the amicable solution is that we look for only swing shorts and longs. We can look for short term longs as well as swing longs. So simple enough setup. I think we have concluded it, the idea for longs and shorts, and very simple, nothing really what do you call out of the ordinary, simple breakout and breakdown setups. That's it for Nifty. If you have any doubts, you can just type them live in the live chat and I'll check it. If not, it's fine. I'll move over to the last discussion of this webinar series on the chart of BTC. I think we did cover it in the last webinar. Let's very quickly have a look at it. Yes, this was the chart of BTC. It was trading around 99094. My account suggested that it was heading up for a 3 and the targets were 126000. Now let's see how it has actually performed on the live chart. So 999, it has given a correction after our discussion. 22nd November, you can see 23rd, it started giving correction. I haven't done anything brilliant here. I've just moved over wave 1 to the next high. It does fit in perfectly. I have checked the internals, though they are not labeled here. It is fitting some guidelines as well. And there is another scenario which is suggesting more complex formation, but that also is pointing in the other direction. So there's only one point which is worth discussing here. If it goes up, it goes up. Already you can see it has 3 legs remaining if this count is correct. Although it can do something like this, give a deeper wave 2 pullback, which is worth discussing. For those who are holding longs here, let's just correct everything first and then check what we are seeing. So as you can see, it has more than 3 legs. If this count is correct, obviously these things can change because the markets are dynamic and the whole of this thing may be removed or deleted depending on what the price action tells me. So anyways, we wanted to discuss the second scenario RS2 is suggesting that a correction is in play, and because we know that the wave 2s can correct to 50-60% retracement level of wave 1, in this case we have that from here to here you can see it's already drawn out. This box range is where we can say the market can go up till, let's see the levels, 83,500 to 79,500. That's a huge range and big downside level. So that is something to be mindful of, that if this correct analysis is correct, it still has the possibility of giving us a huge kind of downside move, and these are the levels. If not, then of course there is nothing to do here. It if it goes up, it continue going up as a wave 3. Simple enough analysis. With that, I think we have discussed all the counts we discussed generally in these webinars. And so if you have enjoyed the content, as I say so many times, do not forget to hit the like button, and much more importantly, share the content. We want to have an increasing or trending cycle of our views as well, not just the markets or our trades, I would say. Right. With that being said, let's put an end to this webinar. R. Singhali has said, thank you, Nirav. Well, you're very welcome, R. Singhali. And thank you to those guys who were with me till the end of this webinar. With that being said, I'll close this discussion now. Take care, guys, and I'll see you in the next one.